Good day, everyone. Welcome to our tax case study analysis. Today, we look at the case of Insik Muniandi, a resident individual taxpayer in Malaysia who runs a freelance software consultancy business as a sole proprietorship. For the year of assessment 2024, he filed his Form B right on time. But a year later, things took a stressful turn. Let's look at what happened during his tax audit on December 15th, 2025.
I can't believe this. RM 40,000 completely disallowed. I am a software consultant. Of course I travel to meet clients and take them out for business entertainment. This IRBM auditor is being way too strict.
I filed my Form B on time, but now I'm facing a Notice of Additional Assessment, Form JA. The tax auditor has rejected my claim of RM 40,000 entirely due to a lack of physical receipts and substantiating documents. I strongly disagree with this decision.
Insik Muniandi, it isn't about being too strict, it's about compliance. Under Malaysia's self-assessment system, the burden of proof is on you, the taxpayer. When we conducted the audit for year assessment 2024, we asked for your documents to back up that RM 40,000 claim.
I told you I lost track of some of them. I am busy running a business. Do you really need every single piece of paper?
Yes, we do. Under Section 82 of the Income Tax Act 1967, you are legally required to keep proper records for 7 years. You failed to provide any valid invoices, business receipts, or even a basic travel logbook to prove these expenses were wholly and exclusively incurred for your business. Therefore, we had to raise a Notice of Additional Assessment known as Form J disallowing the entire RM 40,000.
Insik Muniandi is furious and strongly disagrees with the IRBM's decision. But legally, he can't just ignore it or complain. Let's look at the actual legal recourse available to Insik Muniandi. What is he planning to do?
I want to fight this decision. I am going to write an angry email to the officer's manager.
An email won't work, Insik Muniandi. There is a specific statutory channel for disputes. Under Section 99(1) of the Income Tax Act 1967, if you are dissatisfied with our assessment, you have the right to appeal, but you must use the official prescribed form, which is Form Q.
Okay, fine. I will fill out Form Q and explain my side. When do I have to send it by?
This is where the timeline becomes critical. Section 991 states that the appeal must be made within 30 days from the date the notice was served. Since Insik Fami issued the Form JA on 15 December 2025, Insik Muniandi has a strict statutory deadline until 14 January 2026 to submit it.
Who exactly do I send this Form Q to?
You must address the Form Q directly to the Director General of Inland Revenue, DGIR, and submit it to the IRBM branch that handles your tax file. Remember, you must state your specific grounds of appeal clearly. Just saying the auditor was too strict will not suffice. You will need to produce alternative evidence to prove those expenses.
But life is unpredictable. Imagine the deadline of 14 January 2026 is fast approaching, but Insik Muniandi suddenly got into an accident and is hospitalized. He completely misses the deadline. Is he completely out of luck?
Oh no, it's January 15th already. I was stuck in the hospital and couldn't submit my Form Q on time. Am I locked out of my right to appeal forever?
Fortunately, the law provides a safety net for genuine emergencies. Under Section 101 of the Income Tax Act 1967, a taxpayer who misses the 30-day window can apply for an extension of time.
How do I apply for that? Is it a different form?
Yes, you must submit a Form N, which is the official application for extension of time to file an appeal. In this form, you must give a reasonable cause for the delay. Your sudden illness and hospitalization definitely qualify as a reasonable cause. Just make sure to attach your official hospital admission and medical certificates as proof.
If the Director General is satisfied with Insik Muniandi's Form N, an extension will be granted, and he will get a new deadline to submit his original Form Q. During the audit, Ensik Fahmi discovered that Ensik Muniandi completely hid an offshore consultancy fee of Rm 30,000 in a foreign bank account, thinking the Malaysian authorities would never find out. Let's look at the legal implications of this action.
Muniandi, we also need to talk about your foreign bank account. We found a transaction of Rm 30,000 for software consultancy work done offshore that was never declared in your Form B.
Wait, you found out about that? But that money was paid into an overseas account. It didn't touch Malaysia. I thought it wasn't taxable here.
That is a common but very dangerous misconception. Because that revenue was generated from your software consultancy business operating out of Malaysia, it is considered business income and is fully taxable here. Deliberately hiding it constitutes willful tax evasion and fraud under Section 114 of the Income Tax Act 1967.
What does that mean for me? Will I just have to pay back the tax?
It is much worse than that, in Ensik Muniandi. Because this is a criminal offense, if you are convicted in a court of law under Section 114(1), you face a criminal fine between Rm 1,000 and Rm 20,000, or imprisonment for a term of up to 3 years, or even both. And on top of that criminal penalty, the court will order you to pay a special penalty of 300% of the tax that was undercharged because of your omission.
What? A 300% penalty and potential jail time? I completely regret hiding that income now.
And that brings us to the end of our analysis. The takeaways from Ensik Muniandi's case are vital for every business owner and individual taxpayer in Malaysia. Always keep your receipts and logbooks for 7 years. If you disagree with an assessment, appeal legally using Form Q within 30 days, or request an extension via Form N if an emergency occurs. Most importantly, never hide income. The global tax network is connected, and the penalties under Section 114 are severe. Thank you for watching.